Hi, I'm Jeff Turnahoy, Head of America's Research at Lipper, and today I'm joined by Neal Kerr, Senior Vice President of Products at CI Investments. Thanks for joining me, Neal.
Thanks, Jeff. Thanks for having me.
So, Neal, let's start off. Can you tell us a little bit about the strategy behind your fund?
Certainly, Jeff. So I'm talking today about the CI Portfolio Series Income Fund. And this is really more than just a fund. It's part of our broader multi-manager, multi-asset class program called CI Portfolio Series. This is a series of 7 different portfolios for different type of investors. So the Portfolio Series Income Fund is for an investor seeking income. The other 6 portfolios contain more equity, up to 100% equity exposure for a maximum growth investor. So PS Income, as we call it, the goal is to generate a steady return of monthly income in as diversified way as possible. So today we're generating about a 4.5% rate of interest income inside the portfolio before you consider any growth opportunities inside the structure. We view that as very competitive in today's environment when compared against traditional income investments such as GICs and term deposits and the like.
Neal, would you consider this process top-down or bottom-up?
That's a great question. It's actually both. And what I mean by that is the Portfolio Series program is really built using 2 different groups of investment professionals. On the top-down side of things, we have a research team in Toronto. It's referred to as CI Investment Consulting. And this group sets the asset mix of all our multi-manager, multi-asset class programs with a lot of research from actually State Street Global Advisors. And then they work with the underlying portfolio managers who are the bottom-up managers for each of the individual strategies inside the fund to pick the individual securities. So it's really combining the best of the top-down and the bottom-up, which we think is very important in today's investment climate, where you can't ignore global macro events in your portfolio. At the same time, you need deep research capabilities at the individual security level to pick the best opportunities for your investors.
In 2011, a lot of investors were caught off guard by the performance of conservative strategies. Do you think this is a trend that's going to continue in 2012?
Well, you're right. If we look at some of the more conservative strategies last year, such as Government of Canada bonds or U.S. Treasury bonds, they were some of the best performing asset classes last year. We don't believe that those will be the asset classes that lead in 2012. We think we'll see a change in leadership just because the valuations behind those sovereign debt instruments became quite expensive towards the end of 2012. So we are looking for a change in leadership, and as a result, we are shifting our portfolio based on that view.
Neal, what parts of the portfolio appear poised for a breakout this year?
Well, let me start by answering that by saying we are very careful right now with our exposure to sovereign debt in North America. So Government of Canada and U.S. Treasury bonds. We're managing our exposure very carefully there. The concern is that towards the end of last year, the valuations on those securities got very high and the yields got very, very low. So we are shifting our portfolios in our direction to look at more corporate debt. So I'm speaking here of investment grade bonds and high yield bonds, and looking for more returns from those asset classes this year. And we're also very comfortable with the quality and the dividend streams from some of the equities in the CI Portfolio Series Income portfolio. And by equities, I'm really referring to very high quality blue chip Canadian and global companies, real estate investment trusts, some infrastructure stocks, and of course we're trying to select those very carefully, since there are pockets of opportunity, but there's also pockets of that part of the market that have also already performed quite well.
Well, Neal, thank you for joining me today. And on behalf of Lipper and CI Investments, thank you for watching.
Thanks, Jeff. We appreciate the support of Thomson Reuters Lipper. Thank you very much.